Hello and welcome to another update video on Doge. On our Doge chart here, we continue to see just sideways price action. I've added these trend lines in yellow. I think what we might be looking at here is even the development of some kind of a triangle pattern. Again, as shown in yellow, I would like to see some further evidence for that. But for now, as you can see, we are printing higher lows and lower highs in this sideways range, really. What could be the case is that we are just grinding a little sideways overall before the market then makes a decision potentially to test this support area. Yeah, then in that case, we'd be dealing with a B wave triangle. But we need to see how it develops. For now, we have a 3-wave move down, a 3-wave move up. This does look a bit like a 5-wave decline, so I'm unsure about whether it really is a triangle. That 1-2 setup we talked about yesterday is still active, a 1-2 setup to the downside, but because we've made a new low, I have adjusted Fibonacci resistance. So we have a Fibonacci resistance area on the chart that we can track in the range. Yes, this is an overall sideways range with a low point here that was marked on the 17th of May at around 21 cents. So a break below that level should send it lower quite quickly. But overall, in the range here, we have a Fibonacci resistance area to watch, which we're now approaching. It's defined between 22.8 cents and 24.5 cents. I mean, what does that mean? It is, in my opinion, it's the very first Fibonacci resistance range. Yeah, so we want to have a range to watch, let's say a resistance area to watch, and any break above this resistance area, while it is not full confirmation, but it could be an early indication that at least the wave count is shifting, the bulls maybe are making a comeback. So it's worth being aware of it because, for example, if this indeed is a 1-2 setup to the downside and we're now working on a wave 2 corrective bounce, then the market should hold below 24.5 cents. Okay, above that it's valid as long as we stay below the Friday high that formed here at 25.5 cents, but there's a difference between, probabilities, where probabilities shift and what is actually valid. So yeah, any break above 24.5 cents suggests that something is shifting there, but overall, again, nothing too meaningful there. And what would happen if we break out to the upside? Well, in my view, it would simply be an extension of the A wave to the upside that we have labeled there in orange. Okay, I mean, if it is an extension to the upside, this could even be a wave 4 triangle. So again, I think we're looking here at a sideways range, a triangle, which always indicates indecision. That is why microstructures are currently difficult to read. The overall situation on this chart remains unchanged. What really matters on this chart is, do the bulls turn up before the market or before the price breaks below 15 cents? Because that 15 cent level is the 78.6 retracement of the last rally. And the price should not really break decisively below that level to keep a bullish scenario intact. So looking at the larger time frame for Doge then, looking at the Doge long-term chart, for example, you can see here that we might be working currently on this B-wave pullback. Let me hide the upper section because what I am actually tracking on the smaller time frame is this micro support region with support at around 15 cents. Yeah, I don't show that here on the larger time frame, but on the larger time frame we already turned around in a larger support area. But as I said, it's only a 3-wave move up. So as long as the pullback remains corrective as well, we can watch for higher, but only as long as it's holding that 15 cent level. That's the update on Doge. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.